The story of Aston Martin is a tale of two parallel realities, a split that has defined its entire existence. On one hand, there is the public image, a glowing legend of sleek, silver racing cars cutting through the fog of European racetracks and the even more potent glamour of a fictional British spy sliding into the driver's seat. This is the Aston Martin that captures the imagination, a symbol of ultimate success and style. But the other reality, the one hidden behind the polished garage doors, is a far more human and troubled story. It is a relentless cycle of triumph followed by financial despair, a heartbreaking narrative of a brilliant dreamer who simply cannot balance a checkbook. For over a century, this company has not been in the business of selling cars so much as it has been selling a powerful dream, and the true, untold cost of that dream has been paid, over and over again, by a long succession of hopeful investors who believed they were buying into a sure thing, only to discover the foundation was made of sand. The roots of this endless cycle lie in a fundamental disconnect between artistry and commerce. The founders were racers and engineers, men driven by a passion for building the perfect machine, with little thought for building a sustainable business. They would craft a few dozen exquisite automobiles, each one a rolling sculpture, and then take them to the track to prove their worth. A victory at Le Mans would generate incredible headlines and a wave of prestige that would wash over the small factory. This reputation, this aura of excellence, was the company's most powerful asset, and it acted like a siren song, luring in wealthy industrialists and enthusiastic financiers. These new investors saw the glory and the potential. They saw a brand that stood for the very peak of automotive achievement and believed that such a name must be a goldmine waiting to be unlocked. They would arrive full of optimism and ambition, pouring millions into the company with a plan to finally scale the operation, to turn this beloved boutique into a profitable powerhouse. But herein lay the trap that every new owner, without fail, would stumble into. The very soul of an Aston Martin was its hand-built nature. Every piece of leather was stitched by hand, every engine was assembled by a dedicated craftsman, and every sheet of aluminum was painstakingly shaped. This process resulted in a masterpiece. But it was a financial nightmare. The cost of materials and labor for each car was astronomically high, often far exceeding the price tag they could realistically charge a customer. The business model was fundamentally broken. It was a company that lost a significant amount of money on every single car it sold. The plan was always to make it up in volume, but the volume never came because they could not build cars quickly or cheaply enough to ever reach that magical break-even point. The prestige was the bait, and the brutal economics were the trap, snapping shut on one set of investors after another. The cost of this cycle was more than just financial, it was a deep erosion of trust and capital. Each bankruptcy was a dramatic and painful event. The company would run out of cash, unable to pay its suppliers or its workers. It would then be placed into administration, a form of financial intensive care, or sold off to a new owner for a fraction of the investment the previous group had made. The original investors, the men and women who had believed in the dream during the last upswing, would be completely wiped out. Their shares would become worthless pieces of paper, a stark reminder that a powerful brand name does not guarantee a sound investment. They were left with nothing but a hard lesson, while the company itself, stripped of its debts, would be handed over to the next generation of dreamers. This new group, convinced they were smarter or had a better strategy, would pour fresh money into the empty shell, revitalize the product line, and for a few years, everything would seem golden again. The cars would be launched to critical acclaim, and the cycle of hope would begin anew. All while the same underlying financial cancer continued to grow, this pattern did not just happen once or twice, it became the company's defining rhythm, repeating itself an astonishing 7 times throughout the 20th century and continuing straight into the modern era. Even at its most iconic moments, such as the era of the DB5, a car forever immortalized in film, the company was often teetering on the edge of insolvency, the glamour of the product barely masking the desperation in the accounting department. The most recent and perhaps most public example of this occurred when the company, once again in need of a massive cash infusion, decided to sell shares to the public on the stock market. The power of the Aston Martin name worked its magic once more. Thousands of ordinary people, along with large institutional investors, rushed to buy a piece of this legendary brand. The share price skyrocketed on the first day of trading, creating a wave of excitement and paper wealth. It seemed, for a glorious moment, that the curse had finally been broken. But the old problems were still there. The company was still spending vast sums to develop new cars and was still not selling enough of them at a high enough price to make a consistent profit. The excitement eventually faded, the cold reality of the financial reports set in, and the share price collapsed, losing over 90% of its value and devastating the retirement funds and savings of those who had bought into the dream. The story of Aston Martin, therefore, serves as a timeless lesson that the most powerful and valuable thing a company can own is not just a famous name, but a sustainable business model. Without it, the dream is just a beautiful, expensive illusion, and the bill for that illusion always, eventually, comes due.